Good morning. It's June the 26th, 2015, and I'd like to talk about a very good setup in the E-mini. It's a trade setup that's there quite often, especially when the market goes into a congested, crowded pause type trading day. One of the things that we have an advantage as a buyer at the value area low. So this is our buy zone, and we have an advantage as a seller at the value area high or better. And when we think the market's in bracketed conditions, limit sells and limit buys are the way to go. Otherwise you don't have trade location. Now that's a bit of knife catching. But one of the things that we can see right here, the software is telling you that it's okay to sell. And we're in an area where we should be sellers. And this trade right here is a legitimate or a valid trade. Selling right here, the market doesn't break, we don't have volume, and it comes right back up. Now I don't have an S on that bar, but I do have a pivot, and I'm one tick above what was near resistance at that point. So what we have right here is what we call a failed auction. They tried to take the market higher. It failed right here. Then the market comes back down. So breaking this bar's low is a better trade than what our software dictated, because they tried to take it higher. They couldn't. And you can see the selling accelerate when we take out this low, and you see it accelerate again when we take out that particular low. So these failed auctions in our buy and sell zones are really good trades. And this concept of a failed auction right here, you can see it, is that they tried to take the market higher. They couldn't. You can see all this volume in the top end of the bar. Now we have some people trapped long, and when the market starts to go the other way, they begin to liquidate, and you can see that right here as the market steps down. Now when we open this up into our other charts, the F5 screen, and that trade failed at 98.50 right in this particular area. So we tried to go higher, we couldn't. We get up there, we got 128 people caught high. There were sellers against this price point right here. You can see the red right here off of these particular charts. Then the market breaks and comes back down, and it stops a tick above that low as traders take profits. And you can see the profit taking starting right here at 95.50, 95.25, and definitely at 94.75, and here we sit. Looking at the F6 screen in that same setup, here's your 98.50 right here. We've got a blue bar. We've got a blue bar. We've got one more blue bar, and then right here is the turn on the 19 tick one. The turn came faster with a 20 lot player. It actually came right here on this bar. And the 20 lot trader is the initiator of buy and sell programs. They're the ones that move the market. And if you can get the 50 lot trader to go with them, you have yourself a pretty good trade. So this concept of a failed auction is one of them that you should put in your trader's toolkit. Watch for it. The market tried to break, it couldn't. Comes back up, tries to rally, couldn't. We're in an area where the market should be sold. Starts down, and it gives you a reasonable trade for this time of day. If you'd like to know more about us and have any questions about this particular trade setup, please contact us at info@cnfuturestrading.com or call us directly at 312-361-3895. Looking forward to hearing from you. In the meantime, I wish you good trading.